bought this stock less than a year ago at 253.57. And the current price we saw it was 227.88. So we have lost money with this company. We're down 10%. And we don't, I mean, we might say, oh, it's the war here. Oh, it's, I mean, that's not the point. It's like, why are we losing money? So I start looking at data. So in 2025, earnings per share were 9.51, and the year end in June. And the average P for the year was 23.7. We bought the stock with a P of 26.66. So maybe we bought the stock at a higher PE. And that's probably why we're losing money, I think. So I still recommend it to hold. We can increase the health sector by 5 points, or 4 points, sorry. And I know Viva was sent it this morning, and also MedPace is going to be presented. But we still have to find, I think, stocks in the industrial and consumer discretionary sectors that it will suit better our portfolio, since we don't have any on those sectors. And that's the end of my presentation. And let me stop sharing so Randall can take over.
Carmen, so no recommendation to pick up a few shares now that it's a little undervalued?
Well, that's something that we can discuss. I'm presenting the data, saying what I think, but it's the club who decide if we want to increase that or another one. I haven't checked on Viva. I don't know what Viva is doing.
Yeah, but you still have a hold on. I'm just understanding why you have a hold on RMD, Carmen. I'm just asking.
Because I mean, we have enough. I can put it on the buy, but at the same time, losing 10%, yeah, you can say the cost average will help. But I don't know anything about Viva, for example. I don't know. What I saw was that the price has been so down that the SSG I have, it was invalid. So I cannot make any decision based on that. And I don't think I have, I saw what you have on my iCloud for MedPage, and it was on the whole. So I don't think you will recommend it to buy it, because that means that the P is too high.
That's correct.
So that's why let's put it on hold and we can discuss.
Okay. Well, I was just wondering why your SSG had that hold. Are there any other questions?
You know she's conservative.
I didn't want to take a decision in isolation. Probably I shouldn't say hold, I should say discuss or talk about it. I don't know what other words is fine.
It's fine, fine.
Yeah, we just
I have a question.
Yes, Christian.
Okay. I know that at the last meeting, Randall, you had mentioned ResMed and said that there was some headwinds with some competition that's coming out on the market, some new product that might put the company in direct competition, that it really hasn't had much competition in that medical devices area for some time. But now that there are some new technology or some new, can you tell us about that, or what company that is?
I don't recall that. The comments I've made is this stock got hammered when the GLP anti-obesity drugs came out, because they thought, well, nobody's going to have to be on CPAP at home because everybody's going to have a beautiful body. And obesity basically causes people to be on CPAP, or it's one of the causes.
No, that's correct. Yeah, that's the other one, right? The Ozempic and the that's what's that company? Novo that does Ozempic.
And Lilly, and now and there's a lot of companies in the next year or two are going to come out with new drugs too. That's like Amgen's coming out with one. I think Roche is coming out with one. So there's going to be a lot of competition in that field. But specific in relation to RMD, because ResMed basically, sells BiPAP machines, stuff like that, and people think, well, everybody's going to be thin and svelte. And that, I think it was like a couple of years ago when they first came out. I mean, the stock cratered, and then it realized, well, not everybody's getting perfectly thin overnight. That's why it's come back. So I don't recall any competition, though. I may have said something, but I don't recall off the top of my head, Christian.
I
Can
thought
I
I heard
make it? Yeah,
someone
may I
talk
make a
about,
comment? Yes. Last Thursday on the TikTok, one of the 5 companies it was presented was ResMed. And Ken Kabul, I haven't had the chance to hear the recording again. He mentioned that, but
oh, maybe that was Ken, and I thought it was Randall. Okay,
okay.
you might be right,
So
Carmen.
he say it, but I haven't read the report, listened the recording just to catch up. How was the name of the company? If he says something about, he talks about competition coming up, but I
I knew
couldn't.
I heard it somewhere.
Yeah,
Yeah,
so maybe we have
that
to
there's a new
listen the
company
recording.
out. Yeah, that does got
Yeah.
this. They invented something where it's no longer CPAP, but you insert it somewhere in your body, and it's supposed to help with the snoring, and it's been very successful. And yeah, so I guess we need to find out if that's going to be a headwind in the future. That's going to, the I use a CPAP, and I swear it helps me better sleep. I'm more alert and during the day. If I don't use it, I feel it, but it's clunky. It's a pain. It's not fun. It's not sexy. It's definitely so it's got its pros and cons. So if something else comes out that can do the same thing and the same success rate with less intrusive, I'm sure it would be a major competition to ResMed. So that's something maybe we can look out to try to find more information on. Also, like Carmen said, why it would be a hold temporarily until we get more information, or we compare other stocks to make better decisions.
No.
Randall,
Yes.
Talking about, sorry, before I forgot my idea, talking about TikTok, they talk about, and probably Valencia have heard that, and maybe it seems that she's more into the PER report, which I think is an excellent report. They were talking about you can share a portfolio online. For what I understood, and I have to listen again the recording, you can share, it's a public sharing, but only one person who, I guess the person who shared the portfolio can make changes, but that means that the whole club can see the latest SSGs, because I can see here, I saw the screen that Valencia shared at some point. We have like 3 or 4 invalid SSG. That means that the person who's following that company, and I send it to Valencia, my latest ResMed SSG, so she can update her portfolio. Maybe we can start using that tool.
Well, when you update your SSG on your laptop, I've asked everybody to do that the week before the meeting. That will update the information in the iClub automatically.
No, I don't think so. Because
Yeah, it is. You have to link
okay,
it. You have to link it.
maybe the thing is that I create a duplicate, and that's probably I shouldn't do that and just update the one I have.
Yeah.
Okay,
So
that's
like
good.
I updated MedPace yesterday, and if you look into it, the link shows that I updated it.
My only concern with my iClub, I prefer the better investing how can I say, display
I agree.
than my iClub. But it's because probably I learned to use the better investing one rather than my iClub one. And with the my iClub, I just see pieces of the SSG, not the whole SSG. That's my only thing that I don't know if I have to be jumping from here to there to be able to put everything together, but maybe that's a tool that we can use and
Well,
review
I
it.
have in my personal Better Investing website, I have our club's SSG in a club portfolio. The
So should I
problem is,
share my ResMed with you too?
yes, that'd be great.
Okay, I will
And the
forward
problem
that.
is, just like what you just mentioned, I need to have updated, if you, shall we say, change your forecast for sales and earnings, I need to have that to put that in. So like I got SSGs from a couple people this morning, and I put them into my Better Investing website. into our portfolio at my website. Because I agree, it's easier for me to look at the portfolio review in the Better Investing website than the iClub website. I agree with you. It's a lot. It's just easier.
I think, Carmen, what may be helpful, and I just checked my iClub too, Valencia, this may help with you. When you are in Better Investing and you're doing SSG and you know you're going to send that SSG to the club and you know you're going to connect that SSG to the stock watcher thing in my iClub, I would say add capital SFLMIC. And
Yes.
that way, when you see that stock, you know that that's the one that is connected to my iClub. So going to Carmen's point about she made a duplicate, sometimes when we just save the stock, we forget, sometimes even when we update the stock, which I think what you did, Valencia, you may have multiple Netflix in your library. So when I go to see the Netflix, you said you just updated it, I'm seeing the one from January.
Yeah.
So what I've started to do, and for the people that got my email this morning, for the two stocks I shared, you'll see the ticker, the date, dash SFL MIC, which just means South Florida Model Investment Club. But do something in the name so that you and we know. That's just helpful.
Can I mention something?
Yes.
Sure.
I think what Carmen, if I can just share the screen for a minute, what Carmen was talking about, the Ken Gavula said, if like let's say Randall has the portfolio, our investment portfolio, you can go in here and you can make it public. You see where it says public URL, and then anybody can see our portfolio that Randall has kept updated if we wanted to make it public. Otherwise, it's just Randall, and then he can share it with club members, and then he can upload it to the My iClub, and then any one of the members can see it on My iClub. So what it is it's a workaround, because the benefit of My iClub is that the members can see as long as everyone updates. Where the benefit of the SSG here is it's a lot more user friendly, but not everybody member can see it unless you make it public. But if you make it public, you make it public for the whole world.
My
Well, we're public
understanding-
anyway. We're online, so we're basically
Okay.
public.
But my
I think
that's
the
just
key. Yeah, I agree.
it's a preference. That's just a preference that if you wanted to.
I'll be
Yeah.
glad to do that. That's fine with me if the club wants to do that.
Yeah, my understanding was that it's public, but the people who see that is the person who started sharing with, except that you share the URL with somebody else. But it's just send it to the people that whoever wants to send it out will have it.
That might be right, Carmen. That
That's
basically
what. Because
that-
my understanding was what you said before, but what they were saying on Ticket Talk, it's public, but people who has been, the only people who can see is the people who has been shared with. You cannot
Right.
modify it probably, but you can see it.
And we're
right.
going to need to cut
Basically,
back.
yeah. What
We
she's
need to
saying
move.
is
We need to move
basically
on.
like
Yeah.
if this
Yeah.
URL, if
Yeah.
if Randall sends it to his cousin in Michigan, they're going to be able to see it. But if Randall only sends it to the members of the club, then only the members of the club are going to see it. Anyone who has this URL will be able to see it, but you have to make it public. You have to add this URL. Say you want to make it public. Is I think what she's saying.
Yes, that was my understanding.
My camera's on. I don't know why my face isn't showing up there. But let's move along. Patricia
Rand,
had
do you have a slider in front of your?
Oh, that's what it is. That's what it is.
That's what I was
have a
trying
really
to tell
quick
you.
question to speak to that.
Go
I have
ahead,
to take you
Valencia.
back, but I was curious because on the PERT report, Microsoft does not appear. So is that speaking
It's on
to
there now. It's on there now. I updated last night. And Marty and I both have it. It's on there
Okay.
now. Yeah. Okay, let's go on to,
Hey, Randall,
yeah,
this is Rose. I did do an SSG for Celestica. I was on the list today.
yeah, I know,
But if you don't
that's,
have time, oh,
we were
okay.
gonna, no, we have, but anyway, I'm trying to say, the next one is from Patricia.
Well,
And
I can let Rose go.
okay, go. That's fine, Rose. Go ahead.
Rose, you
I'm
want to
sorry.
go?
Yeah, go ahead.
Okay. All right, let me share my screen. As you guys know, it's definitely not going to be like Carmen. She's quite.
Nobody's gonna be like
I
Carmen.
know, right? I was like, I don't know why Randall put me after her, but okay, we're gonna go for it. So in saying that, Celestica is a large cap company. Their growth rate is way above 12%. Their pre-tax profit is steady and increasing. Return on equity is above 15%, and their debt to capital ratios, within range is 30%. In saying that, I kind of use first of all, let me share about Celestica. They are a technology company, electronic components. And what they do, they build electronics for other companies, design complex hardware and supply chain and production. So as we know that AI is having a boom right now. And with Celestica, what happened with them is that they were first a traditional electronic manufacturing company, and now they transition, or they grew into, better word, to doing original design manufacturer. And because of the AI boom, they did have they are growing. In saying that, I know for better investment, the guidelines is growth projection should be above 20%. But what I used was the annual rates, a little less than the annual rates from the value line. And that's why I did 22 and 30. That's how I kind of forecast that, because for value line, they had it at 24.5 for sales, and earnings was 32.5. So that's how I got my forecast here. So going to the valuation and return, these were the outliers that I used. I removed from the high and low PE. The current price earning ratio is 37.5, and the 5-year average is 10.7. So it's more overvalued. I was reading, an article from Reuters, or however we say it. I guess the big concern is that with this AI growth, is it going to be a boom, or is it going to be a bubble? So in saying that, in using the estimates that, the forecast numbers that I use. And also the industry average for revenue was 7.7, and the earning per share industry average was 15. So the high price in using my estimates was 361, and low price is 74.7. And so it's currently on hold, with the with the numbers I plugged in. And because the upside downside ratio shows it as a 0.5 to 1, there's more risk than trade. And I think that's all I have to share, regarding Celestica. So the, current price, currently it's in the hold zone with the numbers I plugged in.
Go up to the top of your page there. Roll on up. It's interesting. This stock ran a PE in the basically 7 to 15 range, and now it's got a PE. It just skyrocketed with its AI. You can see, look, its PE, high P last year was 50 instead of 15.
Right.
And it's hard to, this is one of the things with this rapid growth. What's the correct high PE now? You said
Right.
13.6. It's hard to say. I don't know if I know, but you might say it's higher than that. Because you're looking, your select high P price is 361, and actually the 52-week high was 363.
Mm-hmm.
So it's just hard to tell because the sales growth last quarter was 60%,
Mm-hmm.
60 instead of 6, and this one stock says boom, one of the many.
But wouldn't it, because of the fact of this right here, the upside downside ratio, the risk is higher than the reward? Wouldn't it be like a hold?
Yeah,
wouldn't it
I
be
would
like
think so, but
more of like,
I think it's going to be a hold anyway, but I think you could
Yeah.
expand your PE a little bit because it's growing so much recently.
Mm-hmm.
So, but I still think it'd be a hold. But like using a high P of maybe at least 20 or something like that, and because it's growing tremendously now, and so your high and low price may be on the higher range, just because I think you have to figure out, and I'm not sure it's possible. What is their growth going to be the next 5 years, 10 years? What are the analysts saying? And if their growth is going to be like 50 or 60% sales growth, obviously the P is going to be much higher. But that's the question. What did the analysts say about the sales and earnings growth?
the analysts, using value line, like I said earlier, the sales is 24.5, and what they have for earnings is 32.5. And that's
Yeah.
why I use 22 and 30, because
Yeah.
the BI guideline said no more, it should be no more than 20. But I know because of AI and the boom,
Yeah. Yeah.
we
No, I
just
think
use
that's
that as
right. I'm just saying your PEs could have been expanded, is all I'm
Yeah.
saying.
Okay.
Question. What if you left your outliers, just leave them, don't omit them? What happens to your 5-year average? You see, there's a
Go back up. Go back up.
Rose
go
is
back up.
in section 3. Take
Yeah.
out the red.
Take out the
Yeah. Take
red.
all the red lines. No, down.
Right there.
Take out that last red
There.
line. That red
5.2.
line. Yeah, take that out.
I'm sorry. Where am I?
Section
Where's
3. Up section 3.
right? You're still looking at you
Right
sliced
there.
through 5.2,
Yeah,
Oh,
yeah, yeah.
2023.
okay. I see what you're saying. Okay.
Now you
Right.
have 5-year average PE of 23 and low P of 7. So that might.
And then your selected low price is low considered the current is 269.1. So the 74.7 seems up a little low.
I guess I thought I used the 5-year PE.
Jennifer, take a look that the 50-week low is 58. So the 74 is not that unrealistic. It's just,
Yeah, I'm thinking that as well.
I don't know. The current price is very close to the 52 weeks high. And you can see that on the upside down ratio. That's why,
Yeah,
I
agreed.
I think this is a scenario where we have our eye on the stock, but because of some unforeseen forces, that stock within a very short period of time has just blew through like a shooting star to pass its 5-year high projection. It's no way to put the cat back in the bag. I think it's very hard to then project what it's going to do in the next 5 years when it's sincerely highly overpriced all of a sudden. I mean, look at 2024, the high PE was 27.8, the low PE was 7.4. Now in 2025, the high PE was 50. It's almost double the high PE from before. We can keep it on a watch list and wait for it to drop back down in the teens. But I mean, to go from $100 all the way to $363 in a year, that cat is out the bag.
It didn't go from 100, went from $58 in 1 year, all the way up to 363.
Well, that too.
Mhm.
I was
That's
just looking
huge.
at
That's
from the
huge.
high from the previous year to the high of the next year.
Value Line gives a high price of $535. So, yeah, that's quite a difference.
Say that again, Bob.
Value Line gives a high price of $535 on the SS
Yeah.
on the, yeah.
Yeah.
Hmm.
So, yeah.
Yeah, I was just looking into our in the iClub. The stock price is not 269, it's 184. On your SSD, you have 269 is current price. I'm looking at it right now on my phone. Viva price is $184. No, I'm sorry. This is CLS. I apologize.
Yeah.
I looked at the wrong stock. Am I wrong?
Okay.
I'm sorry. I'm sorry. You know, CLS is currently selling.
69.10. Yeah, 269.
Yeah, this is one of our watch list stocks. We don't own it. Yeah.
Mm-hmm.
Okay. Let's move on.
Great job, Rose.
Yeah, good work. This is, as Ari said, just shot like a star.
You did.
So now, Ione, do you have V or I can bring
Yes,
it
I have
up?
Viva up.
Okay. Okay.
Okay, I'll share. Oh, get it up. Okay. We currently own 12 shares of Viva at an average cost of about $2,200. As of March 20th, Viva Systems makes up 4.6 of our portfolio. It's in the health information services industry underneath the healthcare sector. And that total healthcare sector makes up 9.4% of our total club portfolio. This company pays no dividend. The closing price of Viva on yesterday was $184.07. The most recent value line is 321. Last quarter sales growth is 16%, where value line forecasted sales growth is 10.5%. Last quarter EPS growth is 22.9. Value line has a forecast EPS growth rate of 12.5. SSG forecast sales is 10% and forecast EPS is 9. The stock has a PE of 34, which is below the average of 55.4. Therefore, its undervalued, its relative value is 61.4. Upside downside ratio is 17.6 to 1. The stock is in the buy range, and Patricia recommends that we hold. The comment is that the stock is trading below its 5-year average PE, suggesting it's attractive, though investors remain cautious. Using a forecast PE of 55.4, excuse me, she estimated a high price of $463.70 and a low price of $168.10. While the stock remains in the buy range, she recommends holding for now and that there is no urgency as the stock appears somewhat, she's saying overvalued, but it's really undervalued. The company continues to perform well by expanding its customer base and adding data cleaning services that help customers prepare for AI adoption. So I'm going to share her I'm going to start with, this is the value line report that she shared, where she took her note from. And then there's information here. Okay, estimated revenue. Well, in the past 10 years, revenues has grown at 22%. Past 5 years, 20%. They're projecting 10.5. Earnings, they're projecting 12.5. Okay, so now I'm going to go to the SSG. As you can see, Viva's lines are still up straight and parallel, although their price is on the low side of the 52-week high and low. Historic growth rate, 22%. Estimated growth rate, 10%. So she cut it in half. But I mean, value line projected 10.5. So that's probably what she moored it to. Historic earnings per share is 26. She's estimating future earnings per share of 9. She estimated a high PE of 55.4, giving us a high price, five-year price of $463.70. And then a projected low price for the next 5 years of $194. Current price is $184.07. It's in the buy range. That's it.
Yeah, this is one of the stocks we discussed last month. The software as a service stocks are getting clobbered because they think AI may put them out of business. I don't know. Nobody knows which ones they will, but that's why they're getting clobbered. Intuit has been clobbered, as we discussed last month, and Viva's dropped from 310 was the high down to about 180 now. But that's the reason. It's because people are concerned that AI may replace some of these software service companies with reliable service that you have to pay for, or much less profitable for those companies. So, any questions on that stock?
I do. I was following Yoni, SSG, and I noticed that it has a good return, but the upside down ratio, I think the low price is not low enough.
Low 201, 170, 194. Yeah, I could see that. Especially with the 52-week low being 168.
Yes. And probably a P of 45, low P of 45, maybe might be too high when the current one is 31.
Yeah, because even the current low PE is 30. Yeah. Okay, we'll send her the book.
So the thing is that I was going to jump and say, look, the average return is higher than ResMed, but because of the low price being too low, I wasn't sure. Now everything changed. I cannot make that decision.
Yeah.
Um, yeah, so I have this SG up here following the same sales and earnings per share growth, and I changed the low PE to 30 rather than whatever price was, and it gave me a 229.9 as a low price. With that, I get a upside downside ratio 5.2, which is much better than it was before. And the return, the average return, it will be 14.2. So it's the same as ResMed.
Mm.
I don't know what Randall has to say about MedPace.
Yeah, let me give MedPace. I'll bring that. I'll go and do
Okay.
MedPace now. Okay. Now, where am I? Trying to bring in Zoom. Lost it. I've just got Carmen there. But it looks like I've lost it. I was trying to bring something else up. I've lost. For some reason, I'm not in the major. There we go. Okay. Share. So we've discussed, I got ResMed, I've got the wrong one up. Can y'all see MedPace now?
Yes.
Okay. Well, let's discuss this briefly. I think I only initially presented this 3 years ago, and we should have bought it, and we didn't. And then last year, I'm the follower for MedPace, but the stock had, the company said their sales and their earnings will be flat last year. But instead, they went up dramatically. The stock literally went from $250 to $600. Now it's back in the 450 range. But now, once again, they're saying what they call their book to bill. In other words, they're not so sure how good they're going to do this year. And these are the recent analyst numbers I just got yesterday. Sales along, when I look like Value Line and Morningstar and CFRA and Zacks, the average forecast sales growth was 11.5. Earnings per share growth was 11%. That was actually the preferred procedure number, which was the average. Pre-tax profit on sales last year, 21%. 5-year average, 19. Return on equity, you can see, was outstanding last year. And the debt to capital is right about the 5-year average. However, when you look at valuation return, as you can see, the stock was as high as $628. The low was $250 last year. It's currently $452. And the 5-year average P is 27, and it's currently at 29. So it's slightly above the current average PE. When you put in the numbers, I used a PE. This is like 36. I used 30 for the high PE, and I used 18 for the low PE, which was here. So I can get to $772 a share, growing the earnings as we described. Low price they used was $275 per share, which was low PE times the current thing. And so that, as you can see, puts it into the hold range. It's kind of interesting. It went up from 250 to 628 last year, and now it's coming back down. They had excellent earnings and sales growth last year, but they're worried that they aren't going to be so hot this year, although that's the same thing they said last year at this time, and they boomed. Anyway, that's where we are. I think it's a solid hold. I think if it dropped significantly lower, I mean, its buy range starts at 275 to 399. I mean, if it dropped into the mid 350s, I'd be very interested. But in this price, I think it's too high. Questions? Okay. So is there education program group 3, or was that what we heard earlier?
No, we're ready to present.
Hey, go ahead. Go ahead.
Thank you.
Mm. Oh, wrong screen.
Yep.
Hmm. Have to get the next one.
You had the tab.
Okay, I didn't change it. And I don't have my glasses on. Good morning, everyone. You gonna go on mute, Ione? Randa, can you hear me?
Yes.
Okay, good morning, everyone. Yes, I chose this this video for something I really have been taking for granted on how to compare stock, a side-by-side analysis, and so I'm not going to start it from the beginning, but I'll just start it from my aha moment here about and you talked about it earlier in the presentation about the need to update the stock price. And so I'll just play a little bit of this. All right. Oh no, I didn't play it yet, but I need to go back and I need to stop sharing and I need to make sure that I share sound first. Okay. And then share computer sound. All right. This is a presentation was done by headquarters on the stocks comparison guide.
Right next to the play button is the sound is off.
Sound is off.
See?
Oh.
Up. Yeah.
Okay, thank you.
Preferred, but not required.
Okay, hold on.
Okay. In our fictional example here, I have done this process of adding an SSG in each of these 5 columns. And so here are my 5 companies. Here's in the column data is the data associated with what's in the header up here. And in the header, there's quite a bit of information itself. At the top, we have the company name, then the SSG study name. That's from the SSG tool, Core SSG or SSG Plus. And we can see here that one of these studies is in red. And if the text is in red in this study name, then that means the price date is more than 7 days old. It's a prompt for you to go into the SSG and update the price at the very least. Now, the study name is underlined. It's actually a live hyperlink. And if you click on it, it will open the SSG, the underlying SSG in Core or Plus. We also have the size of the company, in this case, medium or large, the industry, which is application software in this case. And then this bottom row has a count. It's actually a tally. And what it does is count up the green highlighted cells in the SCG. So give me a second, we'll talk about what that is. And then there's a refresh button, and it updates the SCG to what is in the underlying SSG. We'll demo that. It does not refresh the company data. It doesn't bring in new fundamental financial data. It doesn't bring in new prices. And then there's a trash can icon. So for example, let's say we wanted to get rid of Paylocity Holding. I would click on this blue trash can icon on the right, and it would just remove it out of the comparison guide, but doesn't delete the study itself. I do want to point out in the upper right-hand corner of the screen, there are some menu items. And one of the things we want to talk about now is the tools menu item, and you'll see a couple of options. When we want to clear our highlighting, the green highlights that we're going to use, this is where it's located. The tool also offers some default highlighting that we'll cover. And if you want to restore the default highlighting, this is where it's covered. And then the third option is preferences. We actually have two versions of the tool, SCG Plus and SCG Core. We're going to use SCG Core tonight because it's a more streamlined view. I will show you SCG Plus, however. Concepts are identical. It just has more criteria items. And this preferences item will set your preferences for all newly created comparison guides. So the basic concept of the comparison guide is that you're going to take a look at the criteria and then decide which one of these is the best, or it could be which two of these are the best. You will click directly in the cell to highlight it in a green highlight, and then you can unhighlight by clicking again. It's just a switch, on and off, green on and off. The tally or count in the header keeps a running tally of the number of cells that are highlighted for each company. Now to save a comparison, which I like to do fairly quickly in my process, it's in the upper left in this gray comparison box, and it is a floppy disk icon that is the standard for save. So we'll click on Save Comparison. And when you do that, you can type in the comparison name you'd like to use. By default, it's the list of all the tickers that are in the comparison with the date. But in this case, I've called it demo. You can erase everything and call it whatever you want. Click OK, and the new comparison is saved. We can access our saved comparisons again by going up here into the upper left in the gray area where it says comparison. There is a drop-down box. If I
Okay, I'm gonna go ahead and stop. That was my, I'm gonna call it educational moment, because for me, I had been just clicking and just using what was in the comparison guide. And from watching this video, I learned a lot, especially the need to go back and update the data. And that's it for me. Thank you.
Any comments? We have not used the stock comparison guide very much. I think two things I mentioned, you have to have companies in the same industry to compare them, like that was in that multiple payroll software companies. I do think some really advanced clubs will take do an industry evaluation, like there's 5 companies, major companies industry, and then make a stock comparison guide out of 5. And I know Ken Kabula has talked about that in the past. So that's very interesting. Something we consider doing in the future.
Right.
It's when we present stocks, present the industry, and use the comparison guide to compare the different companies. Any other discussion?
I think this is something that we need to do for this healthcare conversation of, I think we should put it in there, and that can be for next month, but
Yeah.
I mean, we could do it on our own and just present it to the club next month, but I think that that's going to be the best way.
Well, the problem with that, I think you have to have companies in the same, I mean, that's the same sector, but not the same industry, because like you got a software company, you have
I
a medical
did that
device
in
company,
my
and
last- Sorry, Randall. I did that comparison guide in the last ResMed presentation I did, so I guess that was December. The way I have learned when you have the same industry but different sectors is that you
Yes.
compare the company to the sector, each company by the sector, and then see what score more. At the time when I did it in December, it was ResMed, the top one. I didn't do it this time because I didn't have SSGs to the date, and some of them were invalid, and I didn't have, I have an old probably MedPace SSG. So that's why I didn't include in my presentation. But I know I did it in December, and ResMed was the top one at the time. We can always do it next meeting just to see what happened. I'm not expecting much changes on that. But the way you compare it, the same industry, but different sectors, you compare the company with the sector to the sector, and you can see in the and show it there that on the top right, the farther right column is where you can select the sector, and that's how you compare it with.
Well, actually, the sector is larger, Carmen. It's the other way around. The industry is the smaller one.
It's the industry. Yes, you're right. Sorry. So you
like
have the same sector, different industries. You compare the stock to the industry.
That's correct. You're absolutely correct.
Yeah, but I know I did that in December.
Okay.
Okay.
Are there any stocks to present? It's already at noon.
Yes. And
Okay.
I can make it real quick.
Okay, go ahead.
Okay. So I sent the club 2 different stocks. Both may not be, I don't think we're ready to buy, but I'm actually gonna start with CRVL. I'm presenting on behalf of my partner Sharon at the moment. So CRVL is in the financial services sector, and when I checked, do a quick. I may be on the wrong one, but anyway, financial services was still fairly low. I believe we all actually only have Visa right now in financial services. So, so we have some room there. Anyway, Corvell or CRVL, is in the financial services sector within the industry of insurance brokers. They're small cap company, less than $1 billion in sales, and they apply AI technology. Well, they apply AI to machine learning and natural language processing within different industries, especially the healthcare industry. Let's see what else. Yeah, especially the healthcare industry. So I am still presenting this small cap company, even though their historic sales growth isn't above 12%. I projected their sales growth based on the historic growth of 6%. I don't know why that's blocked out. And then earnings per share for also 6%. The pre-tax profit on sales has been increasing in the past 5 years, and the last year is currently higher than the 5-year average. Same with the return on equity. And although they have taken on some debt about 6 years ago, they have steadily been decreasing that debt, and they're currently at 8%, down from 34 and 20% 6 and 5 years ago. So I did projected their high PE for 45, giving them a high price of 110. Their current price as of yesterday was 53.51. The 52-week low, it was 44, even though the 52-week high was about 120. And then the forecasted low was about 40. And I did it based on a low PE of 20, but also wanted to keep it kind of low to like the 52-week low, especially considering that the stock price has been increasing heavily within the last 2 years, but the low is still on the low side. So the current price falls within the buy range of 40 to 53, 40 to 58. It's currently 53.5. It has despite low projected sales growth rate and earnings growth rate. I think because the price is so low, that's given us a pretty decent rate of return if the stock price goes back up to what it was at. So if we move forward, we look at the 52-week high and low here, we're actually buying it on the low side of the last 3 years. The lines are up straight parallel, but they're just not like shooting up. So that's CRVL. And then Fix, which has been doing great. They're currently in medium-sized engineering and construction company. They do HVAC, so they're within the industrial sector. And I wanted to present this one because right now we don't have any industrial stocks. I'm not recommending a buy at the time because you'll see that the price is on the high side and it's actually in the sell zone technically. But if we wanted to add it to the watch list, we will be watching for the price to drop. So even though historically for the past 10 years, sales have grown at 20.5% and earnings have grown at 34.8%. I projected 15 to 15. Evaluate management is all good. And then I didn't mark anything off because despite the very high prices that it has reached over the years, earnings per share has also been growing very steadily. And their high and low PE ratios are pretty average. So I didn't feel a need to cross out any outliers. I did put a high PE of about 25, giving it a high price of about $1,500. And that I also selected a low price of 288 because you can even see it 52-week high. 52-week low was 276. So I wanted to make sure my low price was still low enough. But even with that, the current price is in the sell zone. So I just wanted to bring a company that was in the industrial sector that still was a great quality company. It just was on the high side. And those are the two stocks.
I'll make a couple comments.
Yeah.
This comfort system is just superb because it's putting the HVAC in the AI. And this is actually a stock in the Better Investing magazine a few months ago. And it's just shot up their price. The people who got it like a year ago are just sitting pretty because I think the price has probably doubled or tripled. But it's a great company. So I would qualify it just like you, high quality growth company, overpriced. Now,
At the
the
moment.
first, yeah, at the moment, I completely agree and put it in the watch list. I 100% agree with you, Ione. The
Okay.
other company is not a high quality growth company because it's only growing 6%. So
Right.
I personally would not even look at the second page of the SSG because a lot of times they're value traps. They look cheap. Listen, I've made mistakes with them for many years. And so I've learned from Ken Kavula, if it doesn't pass the front page, don't go to the second page, no matter what it says. That would be my comment on these two stocks. But I agree, Comfort Systems is a great company, overpriced. Corvell, it's a good company, but it's a slow growing company. and it's not really what we would prefer in our portfolios, my thought.
So thank you for that, Randall. What I just remembered what I was gonna say much earlier when Christian was bringing up something he heard in Ticker Talk and he thought it was you. I was like, Randall, that's a great compliment. You got confused with Ken Kabula.
I took it as a great compliment. I mean, I was almost jumping up and down in my kitchen, happy that Chris mentioned that. Because I admire Ken Kabul. I listened to his podcast.
Christian could have sworn it came out of Randall's mouth. But I will admit, this is actually not why I chose this stock. I went to the stock screener and did something in industrials, very high returns, blah blah, and I got fixed. But I will, as a disclaimer, Randall, I did buy fix. Do you want to guess what year?
Oh God, you're killing me. Just tell me how much it's up since then. How many 100 percentage points?
You don't even know. It's like 1,000. But what year?
There you go.
Just 1 year.
2020.
Yep, 2020 is when I bought fix.
Well, good. Now I know why you can take a cruise.
Listen, you got to spend it somewhere.
I agree with you. But no, that was obviously a superb selection for you. And,
so I'll add it to the watch list.
Yeah, and I'll put it on the watch list. That's right. That's great.
Yeah. Oh, so before we go, Brent, just some housekeeping, I think, real quick, because I had my club up. We have okay. Microsoft is not assigned.
I've assigned them. Well, maybe it hasn't.
We just bought it.
Okay, so who presented Microsoft last month? Well, it was on the watch list.
It has been on the watch list for a long time. I don't know who brought it up.
It may have been me that it was on the watch list.
So does somebody volunteer? Because
who would like to volunteer?
I'll do it.
Okay.
Okay, Christian. Okay.
Great.
Thank you. Okay, perfect.
Great. Thank you.
Thank you. And then I'll go ahead and add fix to the stocks we're watching we don't own. Okay. That was it. I wanted to take care of that before we left. Thank you, Brandon.
Do we want to discuss any purchase or sales at this time? I don't. We have $100 and think we're running after noon, so let's just open up to the guests. I'd like to hear what y'all have to say. Good, bad, recommendations or suggestions.
Randall, will you be sharing the public portfolio because
I'll be glad to.
That's the only way we can make a decision on buying or selling, I think.
I'll go ahead and do that the next week. Yeah, I'll do that.
Yeah. Okay. Thank you.
Oh, this is Bob. Good meeting. I would be willing to bet that Carmen likes to listen to the Wheeler Dealer Club. I saw a lot of similarities in her report. Great job using PowerPoint.
Thank you, Bob. I see you on the Wednesday mornings meetings. Those are fun meetings.
Oh, yes. Yeah.
I sit in the back, though.
From
you all.
If any of you hadn't listened to Wheeler Dealer in Ohio, boy, they've got a good system. Anyway,
is that a model investment club or a regular club, Bob? Or
model? Okay. Yeah, in Ohio, I think it's northeast Ohio.
Okay,
that's Kathleen Richards Club, Randall.
It's what?
Kathleen Richards Club.
Okay.
And they meet on the second Thursday of the month. Right, Bob?
Yeah, I think that's right. Yeah. Uh-huh.
Okay. I'll add that to my list.
They're very good on education, and they have been doing this for a long time. and they had met relevant people in the BI community that probably by now they're all passed away. So Yoni probably can say something. Think but not know all of them in some point, huh? No?
No, I'm only gonna say good to see you, Bob.
Any other guest comments?
Venus, are you on 2 devices or did you invite a friend? And good to see Michelle. And good to see Zelka and Bill, Moran. And that's it. All the other guests left.
Okay. So our next meeting is April 18th at 10 o'clock in the morning. Looking forward to everybody. Hope everybody's going to Bink. Looking forward to that.
Oh yes.
Some people,
Who else is going to Bink?
Yeah.
Dr. Cobb asked in the chat.
I am going.
Carmen, your name's there. Randall, your name is there. Anybody else on the call going to Bink? Sharon Jackson. Sharon Jackson. Okay. Okay, cool. Go ahead, Randall.
okay. Well, yes.
Zelda?
I was just saying I'm gonna go to Bink too.
Oh,
I'll see you
good.
there.
Oh, good. We'll finally meet.
I met you last
Yeah,
time.
y'all met already.
That shows how bad my memory is.
Re-
I'm an old
Re-
man.
He knows you better now, Zelda online. So now that
Okay.
yeah.
All right.
Okay.
All right.
Anything else? Oh, well, we're adjourned today. Hope everybody has a wonderful weekend. Looking forward to everybody seeing you next month.
Thank you.
Thank
Good to
you.
see you, Yoni.
Good to see you, Carmen.
Thank you. Bye-bye.
Valencia.